Hi students, 12th Standard Accountancy, Chapter 3, Illustration 22. Durai and Velan entered into a partnership agreement on 1st April 2018. Durai and Velan contributing capital as 25,000 and 30,000 respectively. Profit and losses sharing ratio is 2:3. Okay, so the interest on capital is 5% and interest on drawing for Durai 300 and for Velan 450 rupees. Durai's salary 5,000 rupees per year. Velan received commission 2,000 rupees. During the year, the firm made profit 20,000 rupees before adjustment of interest, salary and commission. Prepare the profit and loss appropriation account. Okay, so we have the format for preparation of profit and loss account. Let's see the format of the profit and loss appropriation account. It's like a ledger account. Okay, the heading is profit and loss appropriation account, debtor and creditor. On creditor side, first we have to enter by profit and loss account what they given in the question. Okay, and then on credit side by interest on partners drawing account. Listen here carefully. All the income and gains is entered on credit side of the profit and loss appropriation account. So interest on drawing, we always prepare the accounts for only for business, not for the partners or owners. Okay, so on business point of view, interest on drawing, the business received the interest on drawing from the partners or owners, so it's a income. On business point of view, interest on drawing is the income, so we have to enter the interest on drawing on credit side. Okay, then come to debit side or debtor side, to interest on partners capital, to partners salary, partners commission. So these three are on business point of view. Interest on partners or owners invested capital to the business. So for that investing capital, business paid interest to its owner or its partners. Because business and partners or owners both are different entity, separate entity. Okay, so business paid interest to the partners. So on business point of view, paid interest on capital or paid salary, paid commission is an expenses on business point of view, so it is to be debited. Okay, then we have the higher value on credit side. So we get the total on credit side. If you get the total on credit side, the net profit is to be on debit side, right? Then we have to distribute the profit sharing ratio according to the given profit ratio. Okay, so as per the format, we have to first write the heading, that is profit and loss appropriation account for the year ended 31st March 2019, what they given in the question. Okay, debtor creditor, first we have to enter on credit side by profit and loss account 20,000 rupees what they given in the question. Okay, then we have to write interest on drawing account on credit side. Durai's interest on drawing is 300 rupees and Velan interest on drawing is 450 rupees what they given in the question. We have to enter here. These two entry only will appear on credit side. Let's go to the debit side, debtor side. Interest on capital account. Listen, Durai's capital is 25,000. Interest on capital 5% is given in the question. So 25,000 into 5% means 5 by 100. This 20 is to be cancelled for this 20. Remaining 250 into 5, right? So 5 5s are 25. 250 into 5. 5 5s are 25. Remaining 2. 5 2s are 10 plus 2, 12. This 20 is added here. So interest on capital for Durai is 1,250 rupees, right? Then Velan capital is 30,000 rupees. Interest on capital 5%. So 30,000 into 5% means 5 by 100. This 20 is to be cancelled for this 20. Remaining 300 into 5. 3 5s are 15. This 20 is to be added here. So Velan's interest on capital is 1,500 rupees. Okay, so interest on capital we entered Durai's interest on capital 1,250, Velan's interest on capital 1,500 rupees, and Durai's salary is 5,000 rupees entered on debit side, and commission, Velan's commission is 2,000 rupees is entered. Then we have the higher value on credit side. How much rupees? 20,750. So we have entered the higher value as the total on credit side. If you get the total on credit side, then you get the balancing figure on debit side. The balancing figure is 11,000 rupees. So we have to distribute the balancing figure 11,000 rupees as per the partners ratio. So what is the ratio is given here? 2:3, right? So as per the ratio 2:3, we have to distribute the balancing figure for Durai and Velan. So for 11,000, Durai 11,000 into 2:3 means, so listen here carefully, profit sharing ratio is 2:3. Okay, we have to distribute the profit sharing as per the profit sharing ratio for balancing figure 11,000 rupees. So Durai have 2 and Velan ratio is 3. Okay, 2 plus 3 equal to 5. Okay, 11,000 for Durai, 11,000 into 2 divided by 5. So 2 11s are 22, 22,000. Okay, divided by 5 means 5. 4 5s are 20, remaining 2. Okay, this 0 is to be added here. 4 5s are 20. This 20 20 cancel, remaining 0. This 2 0 is to be added here. So Durai's profit sharing ratio, as per the profit sharing ratio, Durai's share is 4,400 rupees. Okay, then Velan has profit sharing ratio is 3. Okay, so 11 into 3 divided by 5. Okay, so 11 3s are 33. This 3 0 is to be added here. So divided by 5. Okay, 6 5s are 30, remaining 3. This 0 is to be added here. So remain again 6 5s are 30, 30 cancel, remaining 0. This 2 0 is to be added here. So Velan's profit sharing ratio is 6,600 rupees. Okay, so do you have any doubt? Please comment it on the comment box. Thank you. Take care. Please subscribe my channel.